Hi friends, today we are starting with recording of transaction, which is the first duty of an accountant. So recording is the first duty of an accountant. What the accountant is supposed to do in a company, that we would be looking into. First of all, he has to identify what transactions, those transactions having monetary value, some economic value, and it should be supported by a source document. Then how he is doing the recording, that we would be studying later. This is the first thing, the primary entry being journal entry. This is the primary entry doing by an accountant once the transaction is completed with a source document. So first of all, he will be journalizing the thing, then he will be preparing an account, classification of the accounts mentioned in the journal entry, which is being the language of accounting. When he is doing on occurrence of the transaction, so in a company, the accountant should be very careful while recording the transaction, that he should have a source document for every transaction he is recording. Then why he is doing like that? First of all, for maintaining proper and accurate financial record. Secondly, most companies nowadays having some law for the business. If it is a partnership firm, if it is a company, there should be a governing law in every company. So in order to comply with that law, he has to prepare the books of account like income tax and all. Thirdly, if he prepare the books of account properly and he give the correct results of the company, so that management can take informed decision making. So management relies on the report of the accountant. Now we need to understand the concept of debit and credit. Now we already discussed the duty of an accountant is to record the transactions, those transactions having economic value supported by a source document. This is what been termed as money measurement concept. So this is being the base of an accounting, like you would be recording the transactions which is having some economic value. Now we can analyze one transaction. For example, when a business buys machinery worth 15,000. So here, for recording purpose for the accountant, the implication is like we give 15,000 to supplier and we take machinery worth 15,000. So there is a concept like give and take aspect is there. We are giving something, we are getting something. Accountant is supposed to know about, I mean, he should be clear about this thing. From here he will be recording the transaction. So in every transaction, two aspects in accounting point of view, two accounts are there. Here that two accounts are, first of all, we are giving cash, so cash account. Then we are getting what? Machinery. So machinery is an account. So two aspect here means one is cash we are giving and second is machinery we are getting. This concept is also called, I mean, this is another concept called dual aspect concept. So in a business, for every transaction, there will be two aspects. That's what been termed as dual aspect concept. Now we need to know the rules of debit and credit. The accountant is supposed to be very clear about debit and credit, then only he can properly record a transaction in the business. So for recording purpose, accounts are classified into 6 categories or 6 groups. First one being capital. Capital means the amount contributed by the owner of the business for running the business. Second one, drawings bar dividend. This is just opposite of the capital. Whatever money he is withdrawing from the business. For company and all, the profit share taken by the owners or the shareholders of the company is called dividend. It's like a withdrawal. Third thing, liability. Liabilities means obligations of the business. For example, if we are getting a loan from the bank, this bank loan is a liability for the company. It's a liability. It has to be paid in the future. So it's an obligation. Next one, assets. Assets means resources of the company. Those resources using by the company in order to run the business. For example, cash. Cash we need to buy goods, or for buying the machinery or paying the salaries, we need what? Cash. Or machinery, for example, why we are buying? In order to run the business. So machinery is a resource. Or the inventory keeping for selling, in that case inventory is a resource. So these kind of things are assets of the company. Next one, revenue. Revenue means the income generating by the business from its activity. Like if we make a sale, we are getting the income. That's what we termed as revenue or gains. Next one, expenses. We are paying these expenses like salary of the employees, or rent of the building, or utilities, or we are buying goods. These are expenses of the business. So this is the general categorization of accounts. Next one, account grouping for debit and credit. Now the following thing you have to be very clear about regarding these three accounts, that is drawings or dividend, assets and expenses. We are grouping under debit. Means most of the time these accounts are having debit balances. For credit, the other three items: capital, liability, or revenue and gains. Now for recording purpose, these are the rules to be followed by the accountant while recording the transaction. For example, debit the increase and credit the decrease. So for these three assets, the drawings or dividend, assets, or expense or losses, whenever there is an increase, we have to debit that account. Whenever there is a decrease, we need to credit. So next category, the opposite thing. For capital, or for liability, or for revenue, whenever there is an increase in a transaction, while analyzing a transaction, if liability is getting increased, that liability account should be credited. Why? Because credit to increase and debit to decrease. Just keep in mind this thing. Just be very clear about the concept. This is the basic thing of recording, and the accountant is supposed to know this basic rule. Then only he can properly record the business transactions. Now we need to understand how a journal entry is getting passed. The last example we discussed, we are buying a machinery worth 15,000. So in this transaction, the two aspects or the two accounts affected are, first of all, we are giving cash. So cash account, and what we are getting a machinery. So the two accounts are cash and machinery. Now we need to understand the nature of these two. Cash account, cash is a resource. Machinery account, machinery is also a resource. Now nature of these two aspects, nature of these two accounts are assets. Now we need to remember the rule of assets. Assets, the rule is what? Debit to increase, credit to decrease. Now we need to understand the transaction. What is increasing and what is decreasing in this transaction? In this transaction, machinery is increasing. We are getting a machinery, so our asset is getting increased. Machinery is getting increased. And regarding cash, we are giving cash, so cash balance is getting decreased. So for this transaction, first of all, nature of the two aspects. The two aspects are, first one cash, second one machinery. Nature of these two aspects, nature of these two accounts are, both are assets. And now we need to understand the rule. For increase, we need to debit that aspect which is increasing, and we need to credit that aspect which is decreasing. Here we need to debit machinery. Why? Because machinery is increasing. Machinery is increasing. And cash account we are crediting. Why? Because cash balance is getting decreased by way of this transaction. Now, this is the format by which we are recording a transaction in the books of accounts. Machinery, we already told, machinery is debiting. So first we are writing the debit aspect, machinery account, then putting DR. DR means debit. And there should be two columns for the journal, debit and credit. Here machinery we are debiting, so we are recording in debit column, and to cash means credit. Credit is denoting by putting 2 in front of the account. To cash 15,000. For every transaction there should be a date, and there should be a small description what that transaction means. Now this is the base of accounting, the recording of transaction. So accountant is supposed to be very clear about the recording of journalizing of the transaction, because the other duties nowadays are being handled by software. Here he is supposed to give the proper journal entry. All other duties are doing by the system only. Now we need to know the second duty of the accountant, being classification. So means arranging similar transactions into groups. After recording the journal entry, the accountant needs to classify entries into respective groups, respective ledger accounts, by creating an account for each entry. Now this is the format of ledger accounts. For this example, there are two aspects. First is machinery, second is cash. These are the accounts of machinery and cash account. You can easily go through and understand. The transaction we just now ended in machinery account, we already discussed, machinery is getting decreased. The DR denotes debit side of the account, CR denotes credit side of the account. So machinery in this case is increasing, so debit side we are recording to cash in the particulars column, and amount column we are putting the amount, and there should be an date column also. Regarding cash account, we are crediting cash account, cash is getting decreased, so we are recording in the credit side of the cash account by way of the journal entry. Machinery account, amount is 15,000. Now this account is also called T accounts. Why? Because the format of the account is just like a T alphabet. In practical scenario, again software is doing this duty, the classification thing. Accountant is supposed to put the correct journal entry, this account maintenance, then trial balance, then final accounts. All other things are nowadays handling by the software only.